Welcome back. Lawmakers in Washington are trying to help homeowners dig out of the foreclosure pit in order to stabilize the housing market. In focus tonight, a new FHA mortgage plan and possible tax credits. CNBC's Diana Olick reports on the latest effort to fix the home front. Diana.
Well, Maria, there are so many housing plans floating around the Hill today. We're going to try to make some quick sense of it all, starting with the House Financial Services Committee Chairman Barney Frank's hearing to talk up his plan to save troubled borrowers. Now, Frank wants the FHA to guarantee $300 billion worth of mortgages if the lenders write down the value of the loans. He thinks the plan could help 1 to 2 million borrowers at an upfront cost of $10 to $20 billion of taxpayer money.
I want to put the servicers on notice. We can't make them cooperate. But if we see a widespread refusal on the part of servicers to cooperate voluntarily in what we think is an important economic problem, and in which we are trying to accommodate their interests and not be coercive, they can expect much tougher regulation in the future.
Now, at the same time, the House Ways and Means Committee was hashing out a plan to give a tax credit for first-time home buyers, offer an additional standard deduction for property taxes, and expand the low-income housing tax credit. All of this on top of this Senate package, which could be voted on tonight, to give home builders a big tax break, offer a $7,000 tax credit to people who buy foreclosed homes, and give $10 billion to states to refi subprime loans. So what exactly comes out in the wash?
I think it actually is fairly important whether or not there's going to be targeted housing relief approved by Congress. And I think there will be, but it'll be a collection of minor provisions, not something that the markets would say materially changes the outlook for the housing market.
And just to complicate things even further, at Chairman Frank's hearing, an FHA commissioner announced that the FHA would be expanding the kinds of loans that it would take, taking on riskier loans. That is only if the lenders, again, will write down the principals on those loans. And, Maria, that is the biggest if in all of these plans.
Sure is. Thanks, Diana. Diana Olick is in D.C. tonight. Mortgage applications rose nearly 5.5% last week from the previous week. Meanwhile, perhaps fueled by the higher jumbo loan limits now offered by Fannie Mae and Freddie Mac. But mortgage brokers are telling CNBC that relief for borrowers is proving more fantasy than reality. We get details now from Fred Glick, the CEO and president of U.S. Loans Mortgage in Philadelphia, along with Mitchell Obam, president of Legend Mortgage in Los Angeles. Gentlemen, good to have you on the program.
Hello, Maria.
So Fred, let me kick it off with you. Give us a status check here. The Congress obviously heralded the ability of Fannie Mae and Freddie Mac to come out and buy more mortgages to help stabilize this market. Since you received the details of that requirement, of what's going on there, what's your conclusion?
Well, I've renamed this, instead of conforming jumbo or jumbo conforming, whatever they're calling it, I call it mumbo jumbo.
Oh, God. That's a good one.
Well, the price...
Mumbo jumbo.
Yeah, the mumbo jumbo, because the interest rate is about 1 point to 1.1 points higher on a daily basis than the conforming loan at 4.17. So who's it helping? People are looking at that and saying, wait a second, I thought I was supposed to get help here. Thought I could do a cash-out refi and take some money and spend it into the economy to help it. But instead, they're back to either going to a 4.17 plus a second if we can find it, or to local lenders that I'm able to find that write their own paper, or there's even a couple Wall Street firms that are doing their own paper at normal rates, but they're doing 5- and 7-year ARMs, not 30-year fixed, which is what most people want.
So, Mitchell, how do you see? You recently closed on your first mortgage for a client under these new Fannie Mae, Freddie Mac guidelines, correct?
Correct.
So how difficult or easy was the process?
It was about 2 weeks ago, and it was a little bit more difficult than we initially expected. It has gotten a little bit easier at this point.
What did you encounter?
Lots of confusion on the lender's part. They couldn't really price the loan or figure out what to do with it. They were offering it, but they weren't really sure even how to underwrite it at that point.
Okay, and how did you get around that?
A little bit of perseverance. Eventually we got to the bottom of it. We were able to lock the loan at a pretty attractive rate. And, the lenders are starting to come around at this point.
So, Fred, is it worth the wait and worth all the confusion that Mitchell's talking about for home buyers and brokers who were told, hold off on doing anything until these guidelines get in place?
Well, the biggest problem is that these guidelines are temporary. So if you're the one buying these paper with the over 417 prices, and you don't know after January what can happen to these loans, because the people might not be able to refinance it in a couple years when either if the economy drops and the people are starting to lose their houses and they can't refi it. We need to make these permanent. If they're permanent, the rates are going to get better on these things, and more people are then going to use them, and especially in California, it's going to revive that economy.
So how do you see this playing out then, Fred?
I think there's going to be a lot of congressional pressure to make these temporary numbers permanent and also change around FHA. And there's a bunch of things with FHA that are going to have to come around, but Congress has to realize that if you do an FHA loan and it goes into default, it's the U.S. government who stands behind it, not somebody who sold paper to way overseas.
Right.
So that might be a bigger crisis.
It's a good point to make. Gentlemen, thank you so much for weighing in on this. We appreciate it.
Thank you, Maria.
We'll see you soon.
Thanks.